Hi, this is Andy Hoffman of CryptoGoldCentral.com, where I publish a daily crypto-focused blog and provide professional cryptocurrency consulting services. Unfortunately, my audio blogs have been far more defensive than a year ago, as the sector continues to consolidate the historic price surge of November through January. In Bitcoin's case, modestly overshooting the unquestionably historically bullish fundamental developments of last summer, and in most altcoins' case, an epic dot-com-like bubble caused by a mad dash of opportunists piggybacking on Bitcoin's success, and an equally herd-like rush of uneducated investors into assets they knew nothing about. Unfortunately for altcoins, investor skepticism will cause the vast majority to dramatically decline versus Bitcoin over time, aside from the handful that can demonstrate viable, valuable long-term crypto strategies that do not compete with Bitcoin, but complement it. Conversely, Bitcoin has nothing to prove, operating at peak efficiency with increasingly viable use cases and a rising hash rate despite the current price decline. That said, the current decline is devastating everything from Bitcoin to Zen Cash, making it extremely unpleasant to deal with in a sector where investors were spoiled by more than 2 years of relentless bull market action. It's funny, however, to consider that as devastating as it's been, it's no different than the pattern Bitcoin has demonstrated throughout its 9-year history of massive price spikes occurring in extremely short periods of time before crashing back to higher lows than the previous bull-bear cycle. To wit, in yesterday's "If Bitcoin's 2017 surge was a bubble, how should its bursting compare with past bubbles?" article. In it, I posted a table of the past 4 Bitcoin bubbles, which I say in quotes, given that each of the prior 3 saw their highs taken out, in each case supported by an improving fundamental outlook. In spring 2011, for instance, Bitcoin rose 1,700% in just 2 months, before plunging 92% in the ensuing 4, in an event I do not expect to repeat, given how strong Bitcoin's current outlook, despite a nearly all-time low Mayer multiple. Then, in early 2013, Bitcoin rose 1,200% in 3 months, before falling 65% in the next 2, followed by the Mt. Gox bubble in late 2013, when the price rose 800% in 2 months before plunging 70% in the ensuing 3. And finally, Bitcoin's most recent bubble, in which it surged 2,000% in 2017, 3/4 of said gains in just 5 weeks' time before plunging 70% in the next 2 months. So for all the angst about this horrific bear market, there's nothing uncommon about it in terms of how Bitcoin is historically traded, other than the fact that fundamentally, Bitcoin's outlook has never been better, which probably explains why, after an equally typical 70% plunge from the highs, the price is nearly 30 times higher than the post-Mt. Gox lows. Additionally, the amount of time it spent near the high was so short, it won't be until November that we're actually trading at a price below the year-ago level, if today's 70% discounted price holds firm. Psychologically, this makes the decline easier to accept when one considers that at this time a year ago, to the week, we were amidst the bloody scaling debate when the price plunged from $3,000 to $2,100 when Bitmain announced the UAHF hard fork proposal. Yes, Bitcoin's most recent price surge and plunge has been textbook, but that hardly made it predictable other than in hindsight. As in my view, not a single Bitcoiner, from Andreas on down, could possibly have predicted what occurred last year, in which amidst the broadest and most relentless string of FUD events, many of which posed real imminent dangers, the price rose 20x in a single year's time. Not to mention the fact that its biggest catalyst was the creation of not one, but multiple successful hard forks, the biggest of which not only aimed to usurp Bitcoin, but for a variety of non-fundamental manipulative reasons, outperformed it on a price appreciation percentage basis. Throw in the epic, nearly unprecedented explosion of altcoin creation and price appreciation in just a few months' time, particularly December and January, and it's safe to say the events that unfolded were several standard deviations off of forecasters' most likely scenario. Unfortunately, the price boom, in my view, primarily caused by irresponsible Wall Street product creation, from CME futures to crypto hedge funds, was no less volatile than previous price surges, despite significantly higher prices and institutional participation. However, given the predictable nature of Bitcoin's historic price cycles, which again I say in quotes, the next price surge should yield significantly higher prices, institutional ownership, and network security, likely yielding increased price stability and reduced volatility. As for where we stand at the moment, the poor price action, as opposed to prior bear cycles, coincides with the strengthening Bitcoin network and rapidly spreading understanding of how it works and what it has the possibility of accomplishing. Some say the sector needs to purge all of the bubble's excesses, which in many aspects it already has, given that 70 to 80% declines in nearly all top-tier coins and for many of the lesser altcoins, 90% or more. If that's the case, does this necessarily mean Bitcoin already down 70% from its highs needs to purge too, despite having achieved its hard-fought, albeit excessive gains on the heels of monumental fundamental achievements on both an absolute basis and at the expense of dozens of altcoins that hoped but failed to usurp it? Particularly Bcash, the Ponzi scheme created frantically and haphazardly in the wake of Roger Ver and Bitmain's failure to prevent Bitcoin SegWit, which, with each additional day of price weakness and heightened mining competition, increases the odds that its principal holders will be forced to sell. To that end, I cannot emphasize enough that you read the early March article by Crypto Herpes Cat titled BCH Headed Toward the Abyss, with a question mark. To that end, consider Rand Nooner's tweet this morning that it's the same mentality that bought at 18,000 that is selling now, which, though hardly scientific in nature, unquestionably houses a significant amount of truth, in that at the December peak, investors were literally throwing money blindly at Bitcoin, like the CGC client who literally begged me to put a huge chunk of his life savings into Bitcoin on the very day of the $20,000 top, which I declined to do given that the price had surged nearly $2,000 in the prior 24 hours. Conversely, we are today witnessing mass capitulation of the latecomers who joined the party after the post-SegWit, post-Bcash surge had already occurred, as not only is there cumulative understanding and conviction in Bitcoin's fundamentals to be desired, but the paper losses they are enduring are too much for anyone to endure, no matter how strong their conviction. Clearly, this group checked out mentally some time ago, as indicated by the 75% decline in crypto-related internet searches and similar declines in crypto-related tweets, podcasts, and bullish articles. However, now that former price support levels, real and imagined, are breaking down, they are capitulating on their positions too, aided no less by the rising tide of TA-based FUD, supplemented by fundamental FUD by a mainstream media desperate for, and perhaps lustful of, a crypto price collapse. Throw in the massive leverage afforded by increased margin trading options, and of course CME and CBOE futures contracts, and you can see why and how sentiment and prices reverse so quickly. Quite predictable for financial markets if history is any guide. Then again, this is Bitcoin, where nothing can be considered conventional, mainstream, or predictable, other than the relentless rise of its network security over time, as measured by hash rate, and inexorable technological advancement via numerous disparate members of its rapidly growing, increasingly decentralized investor, mining, and service provider network, in some cases with profit-based motives, and others simply pushing the limit and coding barriers. This, as its long-term use case propositions of the leading store of value asset and potential cornerstone of future monetary regimes, becomes increasingly likely given the ongoing erosion of fiat currency fundamentals and disinterest in archaic precious metals. Thus, as bad as things feel, despite still being above $500 above February's spike bottom low, when the Mt. Gox trustee dumped 8,000 Bitcoin for decidedly non-fundamental reasons to exactly the $100 billion market cap level where institutional investors first entered the space. And as cacophonous as the naysayers have become, both fundamental and technical, the odds of Bitcoin doing something unpredictable have never been higher, particularly at a time when nothing fundamental is wrong. Futures positions have never been higher, futures short positions, and the Mayer multiple, measuring Bitcoin's price relative to its 200-day moving average, is lower than all but 5% of the time over Bitcoin's 9-year history. Lastly, I want to address an email from a subscriber who insists I have been wrong about Bitcoin and giving bad advice to readers and listeners. This despite having very publicly and relentlessly advising buying and holding Bitcoin since January 2016, when the price was roughly $425. As discussed in yesterday's article, My Bitcoin Genesis and Goal at CGC. First, he asks, how can you continue to cheerlead Bitcoin when one entity, Mt. Gox, has basically killed Bitcoin momentum single-handedly with 137,000 Bitcoin hanging over the market like a guillotine? To which I reply that 1, there is no direct evidence that Mt. Gox, specifically the Mt. Gox trustee, single-handedly changed anything, even if his sales and irresponsible method of executing them clearly exacerbated the decline. Second, at current prices, 137,000 Bitcoin is valued at just over $800 million, or 0.8% of Bitcoin's market cap, which, if it were actually sold, could be snapped up by thousands of multi-billion or even trillion-dollar investors and institutions, like the ECB, for instance, which 3.5 years after it commenced QE and 4 years after launching negative interest rates, is still 2.5 trillion euros of QE later, printing and monetizing 30 billion euros worth of bonds each month, i.e. $800 million roughly every 16 hours. And finally, per my May 23rd article, it's possible the Mt. Gox trustee is done selling, and if not, that little liquidation remains. An analysis of what the trustee has done and likely will be required to do suggests limited, if any, additional liquidations are likely. And if they do occur, it will likely be because prices are already much lower, in which case much fewer dollars would be required to buy them. Second, he claims that any entity that can buy and sell 1,000 Bitcoin can suppress the market endlessly, even easier than the paper suppression of precious metals, to which I can only respond that there was not a shred of actual evidence to support these comments. Third, he asks, name one market in which Bitcoin or Litecoin or any other coin has been adopted. Amazon? No. Starbucks? No. Facebook? No. Where's the mass adoption? Where's the evidence for this mass adoption you talk about? Be specific. Nobody uses Bitcoin for much of anything except geeks. To this, I have several responses. For one, I could care less about Litecoin or any other altcoin, as only when Bitcoin usage is dramatically higher do altcoins have a chance at carving out a viable niche. And for the average altcoin, amongst a sea of thousands, nearly no chance at all. As for Bitcoin, I've never said it is being utilized in mass for retail transactions, though one day it may well be, after its value has been increased to a level, likely in the trillions of dollars, when those holding it as a storage of value, as gold before it, are willing to trade it for everyday goods and services. Not to mention when the currently nascent Bitcoin network is scaled to enable massive amounts of fast, cheap transactions via the Lightning Network and numerous other technological innovations. And last but not least, mainstream acceptance, which will come only via the aforementioned exponential growth of Bitcoin's market cap or a major fiat currency crisis, which logically should one day occur. Next, where is this institutional wall of money? It certainly has not arrived on Bitcoin shores, yet you keep calling for it. Did Novogratz ever launch his fund? I haven't heard a thing about him in months. For one, what I predicted in an article in September, a month before Brian Kelly coined the term wall of institutional money, was that once the Bitcoin market cap reached $100 billion, it will be investable by nearly all the world's deep-pocketed investors, which occurred when Bitcoin's price hit 6,000. So was Bitcoin's rise from 5,550 to 20,000 between November 12th and 17th a coincidence, or was it the wall of institutional money? And what about the epic altcoin bubble that commenced in the first week of January, coinciding exactly with my long-standing, repeatedly espoused view that hundreds of crypto hedge funds would launch on January 1st? This just 2 weeks after the CBOE and CME launched Bitcoin futures contracts, i.e. the first major institutionally oriented Bitcoin products. The fact that this money was invested so rapidly and irresponsibly, particularly in highly speculative and in most cases worthless altcoins, is just a reflection of poor investment strategy from the aforementioned wall of institutional money. And as for Novogratz, I'm not sure why one man, who I might add favors Ethereum over Bitcoin, matters. Although from what I hear, instead of launching a crypto hedge fund, wisely, as there are so few quality crypto assets to invest in, he aims to launch a full-service crypto merchant bank, which sounds a lot like Simon Dixon's Bank to the Future. Next, you cheerlead Bitcoin because you own it, and just like the powers that be killed your dreams of making it big in precious metals, they are killing the Bitcoin dream, and you know it. They win. We will always lose. In the grand scheme, we always lose. There are very big negatives to Bitcoin that you refuse to recognize, such as those previously mentioned. Maybe if you start being honest and stop acting as if Bitcoin is the second coming, you could be taken seriously by those of us who see the obvious flaws. For one, name one person that doesn't cheerlead assets they own, including the person who wrote this email. I mean, the reason I have put essentially my entire net worth in Bitcoin means I believe very strongly in its merits. And if you or anyone believe this is a conflict of interest, you are free to ignore me, which is a ridiculous choice, given that no level of cheerleading, from Andreas on down, can impact the Bitcoin price. Yes, the powers that be killed my dream of a gold and silver price explosion, if you assume those prices to be the sum total of my precious metal experience. However, as was the case in Bitcoin, I was in those markets very early, as in 2002 to 2007, when precious metal miners had a run nearly as spectacular as altcoins this winter. True, a significant portion of those gains were lost to cartel shenanigans. However, an equally significant portion was retained and used to purchase Bitcoin years later. Moreover, the time I spent as a high-profile leader of the precious metal community not only made me an expert in sound money, but put Bitcoin front and center in my world. enabling me to find it early and recreate myself in crypto once I realized that precious metals, due to both the cartel and Bitcoin itself, were on their way out. As for my Bitcoin dream being killed, it's quite public that I started aggressively buying it in early 2016 at $425. Also, that I sold my gold and silver to buy more before the recent price explosion, and that I've been as proactive as can be in the crypto dividend market to the point that I've become well known for my knowledge of the topic. So if $6,500 Bitcoin is killing me, when a year ago it was $2,500 and $3,500 when Crypto Gold Central was launched in September, consider me very dead. And finally, there are plenty more negative aspects to Bitcoin, just ask a baby boomer. They have no clue what it is or how to use it. Storing it and moving Bitcoin for a novice is scary and still to this day not easy. If it were user-friendly, it would have already been adopted as the new currency among us peasants. To which I'll first say that the digital age is about millennials, Gen Xs, and Gen Zs, not the fiat currency brainwashed baby boomers, who have seen their lives propped up by centralized monetary planning and market manipulation at the expense of their children and grandchildren. Unquestionably, some of the baby boomers' massive wealth will flow into Bitcoin, but the real growth will occur when this wealth is inherited in the coming years and decades. Also, while storing and moving Bitcoin is scary the first time around, it's no more scary or dangerous than learning how to ride a bicycle. It's already dramatically easier and less scary than when I started transacting 2.5 years ago. And by the time the 2020 halving rolls around, it will no doubt be dramatically easier and safer still, particularly if rising prices prompt increased Bitcoin interest. So with the Bitcoin price $64.50 and dominance 40%, I think I'll sign off for now. Unlike many in the space, I am a true long-term hodler with not a worry about Bitcoin's future. Hopefully the insanity ends sooner rather than later. But either way, the way I see it, Bitcoin's critical mass is well beyond the point where it can be stopped. Thanks and have a great crypto day.